Hi everyone, this is Prashant Parthiban. Today I'm going to take a training on financial accounting. So what is financial accounting? Say you have a software company that you are running for the past 1 year. Now you wanted to expand your company, so you go to a bank asking them for additional loan. The first thing the bank officer is going to ask is, what is your total asset? What is your profit in the last 1 year? What kind of losses that you have encountered? Like, what is your plan for the future years? So to do that, you need an accounting, which means any transactions that you do on a day-to-day basis for your business, you have to record it. It can be asset, or it can be revenue, or it can be expenses. So that is what we call it as financial accounting. So you are going to take all the financial transactions that you do for your business on a day-to-day basis and then record those transactions in an universally accepted format. So that is what we call it as financial accounting. Now, you need to understand 6 basic terms to have a very good understanding on financial accounting. What are those? The first one is asset. Let's take an example. Say you have 100k, it's your own money, you are investing that into your business. Now, this is what we call it as asset. The reason is, the definition of asset is something that gives financial benefit and something that you own. In this example, 100k is something that you are investing into your business, so we wanted to tag that under asset. So in your business, if you do any investment like this, you put that under asset category. Second thing is liability. Now you want to expand your business, so you are getting 200k loan from your bank. Now you have to repay that loan amount, right? So that we call it as liability. Anything that you owe to some other entity, and to owe that money or to pay back that money, if you want to sell some of your existing resources, then we tag that under liability. Drawings. Say you run your business. Now, for some reason, due to your personal need, you have to pull money from your business account to your personal account. Say it could be, say you have a shop and all of a sudden you need some kind of cash for your personal use. So you take some cash from your business account, then you tag that under drawings. Fourth thing is owner's equity. Say you have a business and you are using your personal car to take your business, deliverables or procurement from one place to another place. Now you are investing your personal equity or personal asset to your business account. So that is what you call it as owner's equity. You are investing your personal asset into your business account. Expenses. So you have your money, you have everything else. Now to run your business, you have to rent a space, right? Or like you have to make sure that the marketing is done for your business. Those things are expenses that you need to do to run your business successfully. So those transactions should be tagged under expenses. Finally, revenue. Now, as a software company, you have delivered what you want to deliver, a product or whatever that you want to sell. Now, when you sell it, you get a revenue from whatever the product that you're developing. So those things you have to tag under revenue. So these are the 6 major kind of accounts that you have to use on a day-to-day basis for every transactions that you do in your business. Now, what is the difference in accounting? Every time a transactions happen, you have to do double entry, which means, say, if you update an asset, you need to update some other account so that the accounts are in balance. Let's take an example. Say you are investing 100k into your business, which is an asset, right? Now, at the same time, as I told you, it's your money that you are investing into your business. So it comes under owner's equity. So if you add a transaction of 100k here, you have to add a transaction of minus 100k, because you are putting money into asset, but you are pulling your money and investing it in a business. So that both always the debit and credit should be balanced. Coming to debit and credit, don't confuse this with debit is nothing but a positive, credit is negative. That's not the case. It's just categorization. So assets, drawings and expenses are categorized under debit. Liability, owner's equity and revenue are categorized under credit. So always it's a double entry. Every time when you make a record under one of this account, you have to make a record in another account so that it tallies out. It is not always that you have to do in such a way that whenever there is an asset, there should be either revenue or equity or liability. Let's take one more example. Say if you are buying something for your software company like a computer, right? So now what you're doing is you're taking say like $1,000 from your account and buying a new computer. So both comes under asset, right? You are drawing $1,000 from your bank account, which is a credit, and then you are investing that to buy a computer. So it can be minus and plus, so it gets tallied. So the understanding here is any accounting should be a double entry accounting. Now T account is nothing but every account should be like in such a way that you write a T, the left side should be like a debit and right side should be a credit. In olden days they used to put a T, and in the left side they used to have all the debit accounts and the right side credit accounts. So they use that in modern days also. Journal, right? It's like writing your own journal, diary, right? In a day-to-day basis, in your business, whatever the transactions happen, right? Like it can be debit or credit. In our example, if you update asset account and then the owner's equity, you will see two records that says debit asset, credit equity, and then that will be the journal entries. So that someone from a stakeholder or some end users, they wanted to go to journal, they understand what are the different transactions that happens for that particular business entity. Ledger is one level above the journal. So journal has individual transactions, right? Like I have a company for last 1 year, right? So I could have updated my asset accounts for like more than 100 times, right? But when it comes to ledger, they group it by account, like what is the total asset for the last 1 year. Say I have made 100 transactions for an asset account, they sum up all the asset account and they put it under one category so that management can look at it and understand where the business is going towards. Finally, transactions, as I told you, everything is transaction based. Whatever transaction that you do in your business, that gets recorded as debit and credit under one of the 6 accounts. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Bye-bye.